There is something very interesting happening during the Iran crisis this year. While many countries are worried about rising oil prices, increasing living costs, and pressure on their economies, Russia finds itself in a very different position. Without sending troops or getting directly involved, Moscow is still able to benefit from the situation. Every time a major global oil route is disrupted by conflict, prices rise, and that is where the opportunity appears. For Russia, oil is not just a commodity. It is one of the country's main sources of income. When prices rise, government revenue rises as well, helping Moscow absorb some of the pressure caused by the war in Ukraine. But the situation is not as simple as it looks. So in this video, we are going to look at just how much Russia is really benefiting from this conflict, and how long this advantage can actually last. Stay tuned. To understand why Russia benefits, we first need to start with the Strait of Hormuz. This is not just an ordinary shipping lane. It is one of the most important oil routes in the world. When tensions involving Iran escalate, and oil flows through the Strait of Hormuz become disrupted, global markets immediately see it as a threat to supply. According to the U.S. Energy Information Administration, disruptions in the Strait of Hormuz caused countries such as Iraq, Saudi Arabia, Kuwait, United Arab Emirates, Qatar, and Bahrain to reduce oil production. Overall, the reduction reached around 7.5 million barrels per day in March 2026 and was estimated to rise to 9.1 million barrels per day in April 2026. This means the Iran conflict is not just about missiles or warships. Its effects are felt directly through oil prices, diesel costs, logistics costs, and eventually the price of everyday goods. And this is the first important point. The Iran conflict created a risk premium in the oil market. Even if oil is still physically available, the fear that a major shipping route could be blocked is already enough to push prices upward. In this situation, Russia is in a highly favorable position. Russia remains one of the world's largest oil exporters. After the Ukraine war began, Western countries tried to limit Russia's oil revenue through sanctions, price caps, import bans, and pressure on the shipping sector. But these sanctions did not remove Russian oil from the global market. Instead, they simply changed where the oil was going. Rather than selling large volumes to Europe, Russia redirected exports toward Asia, especially to China and India. Under normal conditions, Russia usually has to sell its oil at a discount because of sanctions risks, insurance costs, and dependence on specific buyers. But when global oil prices surge because of the Iran conflict, that discount becomes far less damaging than before. Even if Russia still sells oil below Brent prices, the actual revenue it receives still increases significantly. According to reports from Bloomberg, Russia's weekly oil export revenue reached around $2 billion between March 29th and April 5th, 2026, the highest weekly level since June 2022. And this is not a small gain. For a country financing a long and expensive war in Ukraine, every increase in oil prices directly strengthens government income. For Russia, oil is the engine of state finances. The numbers also suggest that Russia is genuinely benefiting from this surge in prices. According to the International Energy Agency, Russia's revenue from crude oil and petroleum exports rose to around $19 billion in March 2026, nearly double compared to February 2026. At the same time, Russian oil exports increased to around 7.1 million barrels per day in March, an increase of roughly 320,000 barrels per day compared to the previous month. This also explains why Western countries struggle to completely shut down Russian oil flows. In theory, the West wants to reduce Moscow's revenue, so it becomes harder for Russia to finance the war in Ukraine. But in reality, Russian oil is still needed in the global market. If too much supply disappears, global oil prices could spike even higher. And this is the West's dilemma. They want to pressure Russia, but they also do not want to trigger a massive global energy shock. When the Iran conflict disrupts Middle Eastern oil routes, that dilemma becomes even more obvious. The world cannot afford to lose both Persian Gulf oil and Russian oil at the same time without causing major price increases. This shows just how complicated energy sanctions really are. During a crisis, even countries imposing sanctions sometimes have to quietly loosen enforcement in order to keep markets stable. In other words, Russia benefits not only because oil prices rise, but because the global market becomes desperate for alternative supplies. After Europe reduced purchases of Russian oil, two countries became extremely important: China and India. Both countries buy Russian oil in massive volumes because it is cheaper than many alternatives. In this situation, the Iran conflict gives Russia another advantage. When Middle Eastern oil becomes more expensive or harder to transport, Russian oil becomes more attractive to Asian buyers. But this relationship also makes Russia increasingly dependent on Asia. Before the Ukraine war, Russia had broad access to European markets. Now Moscow's options are far more limited. China and India understand that they hold strong bargaining power in this situation. They can negotiate prices, choose when to buy, and use their position as key buyers to demand better terms. So the profits Russia enjoys today also come with a strategic cost. Moscow gains revenue, but loses flexibility. Still, this does not mean Russia is truly winning. Although it is benefiting significantly, several factors suggest these gains may not last forever. One of the biggest factors is oil prices themselves. If tensions involving Iran begin to cool down, prices could fall again. According to forecasts from the U.S. Energy Information Administration, Brent crude could fall below $90 in the fourth quarter of 2026, with average prices around $76 in 2027 if supply disruptions continue recovering. At the same time, Western sanctions still complicate shipping, insurance, financing, and international transactions. Even though Russia has built a so-called shadow fleet and alternative payment systems, these solutions still increase operational costs and risks. Russia also continues facing attacks on energy infrastructure, technological pressure, and limited access to Western capital. Oil revenue may help cover short-term weaknesses, but it does not necessarily rebuild a modern and competitive economy. What is clear is that this crisis reveals a much bigger reality about the modern world. Energy remains one of the most powerful geopolitical weapons on Earth. Many countries talk about green energy and energy transition, but the reality is that oil still plays a huge role in determining inflation, political stability, war budgets, and relations between major powers. For energy-importing countries, the Iran conflict means higher costs. But for energy exporters like Russia, it creates an opportunity to increase revenue. However, that opportunity comes at someone else's expense. Consumers pay more for fuel. Companies face rising logistics costs. Governments must spend more on subsidies. This is the uncomfortable reality of geopolitics. One war can become a crisis for some countries, while becoming a source of profit for others. So, is Russia making huge profits from the Iran conflict? The answer is yes, but mostly in the short term. These gains do not mean Russia is free from deeper problems, because it still depends heavily on oil prices that could fall at any time. For now, the Iran conflict gives Russia valuable breathing room,